Valuing a stock beyond the P/E ratio. The P/E ratio, a starting point. The price to earnings (P/E) ratio is a popular tool for valuing stocks. It compares a company's share price to its earnings per share. A lower P/E often indicates a potentially undervalued stock, while a higher P/E suggests investors expect strong future growth. However, P/E alone is insufficient for accurate valuation. Delving deeper, price to book (PB) ratio. The price to book (PB) ratio compares a stock's market value to its book value, assets minus liabilities. A lower PB can signal a potentially undervalued stock, especially for value investors. However, it's essential to consider factors like asset quality and industry norms. Price to sales (PS) ratio, a revenue perspective. The price to sales (PS) ratio evaluates a company's stock price relative to its revenue. It's useful for valuing companies with inconsistent or negative earnings. A lower PS often indicates a relatively cheaper stock, but it doesn't guarantee future profitability. Dividend yield, income potential. Dividend yield is the annual dividend per share divided by the stock price. It represents the return an investor receives from dividends. While not directly a valuation metric, dividend yield can be a factor for income-oriented investors. Discounted cash flow (DCF) analysis, intrinsic value. DCF analysis projects future cash flows and discounts them to their present value to estimate a company's intrinsic value. It's a complex method requiring accurate forecasts, but it can provide a more comprehensive valuation than simple ratios. Comparable company analysis (CCA) industry benchmarking. CCA compares a company's valuation metrics to those of similar companies in the same industry. It helps identify whether a stock is overvalued or undervalued relative to its peers. Relative versus intrinsic valuation. PE, PB, and PS ratios are relative valuation methods, comparing a stock to others. DCF is an intrinsic valuation method, focusing on the company's standalone value. Both approaches have merits and can be used together for a more complete picture. Other factors influencing stock value. Beyond financial metrics, factors like industry trends, competitive landscape, management quality, and economic conditions can significantly impact a stock's value. The art and science of valuation. Valuing a stock is both an art and a science. While quantitative methods provide insights, qualitative factors and investor sentiment also play crucial roles. A combination of approaches and a deep understanding of the company and its industry is essential for making informed investment decisions. Disclaimer: this blog provides general information and should not be considered financial advice. Investing involves risks, and past performance is not indicative of future results.